Hi, I'm Jim Martin. In this session, we're going to take a look at finance leases. So here we have an example. We got a firm that leases an asset for 3 years. Payments of $10,000 a year, straight line depreciation, no salvage value at the end. Fair market value today is $27,000 and the lease discount rate is 7%. So for our calculations, we're going to use either the lower of the present value of the lease payments or the fair market value, okay? And we're going to see here for our balance sheet effects, we're going to be using the present value of our lease payments. We see those are slightly calculated a little bit lower than our fair market value. So let's go ahead over to our calculator and verify that calculation for you. We're going to do second, and we're going to clear our time value of money. Then we're going to go 7 for our interest rate, 3 for our number of periods, 10,000 for our payment. And being that we cleared out our register here for the future value, we don't need to put 0 there. If you want to, you can. So let's go ahead and do that. 0 future value. And then we're simply going to compute the present value. And you're going to see there we get 26,243. Okay. So let's go ahead and move on to our next screen. And what we're going to do over here is we're going to compute the interest expense, principal payment, and closing liability for year number 1. Okay. So to do this, we're going to go over here back to our calculator, to our second, and then we're going to enter the amortization mode by second and then the present value key. You can see P is already set to 1 here. We're going to press enter, and then we're going to do 1, and then we're going to scroll down, and then we go P2 is also 1, already set to that, so you can do that too. If it happened to be a different number there for any reason, I just went ahead and did the 1 to enter, and then we're going to scroll down again. And then you're going to get to balance, and we see the balance is $18,080. That's our closing liability. That would be first. And then our principal paid, you just keep scrolling down. I really do like this feature on the calculator. Pretty neat to play with there. You got 81, 62.98. And then lastly, we're going to see our interest expense here on our calculator. Once again, hit the arrow down. You're going to get $1,837. So that tells you a little bit about the loan, how much interest expense you've had, what the closing liability was, and how much principal you paid down. And you can see there's our principal plus our interest payment. All right, let's go ahead and take a look at this now for year number 2. So once again, we want to jump back, make sure we are in the right mode. Second, present value. There we go, P1. So now we look at period number 2. So press enter, scroll down. You're going to hit enter again here. Make sure it's on the 2. Scroll down, and voila, there is our new balance of $93.45.79. And once again, we're going to use our down arrow on our calculator to come up with $87.34.39 for our principal paid in year 2. And then we go here to $12.65.61 for our interest expense in year 2. Now let's take it one step further. And you could do this for any year that you really wanted to during the term of the loan. We just illustrate 3 years for you, but you don't have to do 1, then 2, then 3. You can instantly go to year 3 if you so desire. So second, present value, once again, we're going to get back in our amortization mode. We got to change that 2 to 3, right? So 3, enter. Then we're going to scroll down. We're going to still evaluate the third period there. And what's our closing liability? Well, you can see it's down here at that 0.0000 and then a 6 tied at the end, but it's basically a 0 for our closing liability. We paid off our lease. The principal paid that year was $93.45, as we're going to see right here when we do our down arrow, right? And then also our interest expense for the year was $654, okay, and 21 cents. Now I'm going to show you this in a table format for you as well. We had our beginning value. Remember, we started out with the lower of $27,000 or $26,243. And you can see our value kept decreasing each year here. Our interest expense, that also started to go down as our principal became, say, paid off. So our interest expense at 7%, you can see, was declining each year. There's our payment. That was steady at our $10,000 for our 3 years. Our year-end lease value was $18,080, and our book value of our asset was $17,495. You say, how do we get that, Jim? Well, we simply took our beginning value, divided that by our straight line depreciation of 3 to come up with $87.48. And basically that's a little bit of rounding there. And you can see in both calculations here, our value of our lease became 0 at the end of year 3.